Tesla has just experienced a dramatic collapse that caught nearly everyone off guard. In under 90 days, Elon Musk's electric vehicle empire has unraveled. The company's stock has plummeted by more than 53%, wiping out hundreds of billions in market value. Simultaneously, Tesla's European sales have nosedived by an astonishing 70%, sparking alarm both inside the company and across Wall Street. But this wasn't random misfortune. It was Europe's calculated response to the United States trade aggression, particularly the tariffs pushed by Donald Trump that strained global trade ties. Tesla became the first major American company to bear the consequences, turning a political dispute into the company's most severe crisis to date. The collapse of Tesla's European sales is particularly shocking, given its former dominance in the region. Between 2018 and 2022, Tesla led the electric vehicle market across Germany, France, and the Netherlands, attracting customers with sleek vehicles, cutting-edge technology, and Elon Musk's magnetic public persona. That success, however, came to a screeching halt in the first quarter of 2025. From January through March, Tesla's vehicle deliveries in the European Union dropped by over 70% compared to the same time last year, according to data from Eurostat and national registration records. In Germany, once Tesla's largest European stronghold, sales declined by more than 73%. France saw a 66% decrease, while Italy's numbers fell by over 70%. This wasn't a gradual downturn. It was a swift and overwhelming rejection by the market. The collapse had several causes, but it all came down to one harsh reality. European consumers turned away from Tesla. According to surveys by European Auto Watch, more than 60% of former Tesla buyers pointed to a negative brand image and a loss of trust as their main reasons for leaving the brand. Factors like price hikes driven by Trump's tariffs, Elon Musk's divisive political statements, and a growing backlash against American economic policies all played a role in alienating customers. At the same time, European automakers such as Volkswagen, Renault, and Peugeot ramped up their own EV production, cutting prices and scaling up supply. Chinese manufacturers like BYD and NIO also seized the moment, entering the European market with competitively priced options that came without the political baggage. By March, Tesla's market share in Europe had fallen below 5%, its lowest point in over 6 years. A company once hailed as the pioneer of the EV revolution was now being sidelined in the very market it helped create. But the consequences didn't stop at falling sales figures. The plunge sparked a financial domino effect that soon rattled Wall Street. The crash in European sales was just the beginning. What followed was a full-scale financial meltdown. By the end of March 2025, Tesla's stock had tumbled 53% from its peak in January. Investors across the board, traders, major banks, and longtime shareholders watched in disbelief as the company's valuation crumbled. The numbers were devastating. On January 1, 2025, Tesla's market capitalization was $770 billion. By March 31st, it had dropped to just over $360 billion. That's a staggering loss of more than $400 billion in shareholder value in only 3 months. This wasn't a typical market correction. It was a financial catastrophe that erased years of gains and sent shockwaves through the investment world. The sell-off wasn't sparked by a single moment. It was a chain reaction, fueled by a mix of damaging developments. The collapse of Tesla's European sales first shattered investor faith in the company's growth narrative. Then came the impact of Trump's aggressive trade tariffs, which drove up the cost of raw materials and production, igniting fears that Tesla's profit margins would shrink significantly. Adding to the turmoil were Elon Musk's increasingly controversial political statements and erratic social media behavior, which alienated both consumers and investors alike. As confidence dwindled, institutional investors began to exit. Hedge funds dumped millions of shares. Major credit rating agencies downgraded Tesla's bonds. Analysts across Wall Street slashed their price targets, many suggesting that Tesla's era of rapid growth was over. By the end of March, the situation worsened as margin calls and algorithmic trading systems kicked in, triggering mass liquidations of Tesla holdings and accelerating the downward spiral. Retail investors, many of whom had believed in Tesla as a generational investment, saw their savings wiped out. Tesla, once the darling of the financial world, had become its cautionary tale. And through it all, Elon Musk remained anything but quiet. In fact, his actions only fanned the flames. While Tesla's business and stock were both in freefall, Musk seemed determined to stir more controversy. Throughout January, February, and March of 2025, his public behavior and political comments became a major source of the company's troubles in Europe. It started with his outspoken support for Donald Trump's new tariffs targeting the European Union and China. Musk repeatedly defended the tariffs on social media, calling them essential for protecting American innovation. These remarks were met with immediate backlash from European consumers already disillusioned with US trade policies. But Musk didn't stop there. He took aim at European leaders, referring to them as bureaucratic parasites and anti-innovation relics. In a US interview, he even claimed that Europe's environmental regulations were designed to punish Tesla. European media outlets pounced, running daily headlines portraying Musk as arrogant, erratic, and out of touch. Public backlash came quickly. In Germany, protesters gathered outside Tesla's Giga Berlin factory, accusing Musk of exploiting workers while showing contempt for European values. In France, consumer advocacy groups launched calls to boycott Tesla vehicles, while influencers flooded social media with messages encouraging people to buy European. The collapse of Tesla's public image wasn't confined to Europe. It quickly spread to the United States. By late March, even US government officials were voicing serious concerns about the company's future. In a press conference on March 25th, the Commerce Secretary made a striking statement. "We are concerned about the risks Tesla's leadership poses to American investors and our economic stability." Citing Tesla's vulnerability to retaliatory tariffs, the steep drop in European sales, and Elon Musk's increasingly erratic political behavior, the Secretary issued an unprecedented warning that sent a shockwave through Wall Street. It marked the first time in modern history that a sitting U.S. official had openly questioned the financial stability of a major American corporation. The market reaction was immediate. Tesla's stock dropped another 6% within hours. Institutional investors ramped up their sell-offs, and analysts slashed their projections yet again. The message was unmistakable. Tesla was no longer seen as a rock-solid symbol of American innovation. Instead, it had become a growing liability. This official warning also raised deeper questions about Tesla's position in the broader U.S. economy. If the federal government had lost faith in the company, what would that mean for future regulatory approvals, government contracts, and strategic partnerships? The situation was spiraling, and the storm was far from over. As Wall Street reeled and consumer trust eroded across Europe, a much larger geopolitical battle was gaining momentum, threatening to pull in not just Tesla, but governments and global industries alike. The chain reaction had started months earlier. On January 3, 2025, when President Donald Trump signed a sweeping executive order introducing a wave of heavy tariffs on foreign-made goods. Promoted as a bold move to protect American manufacturing, the policy aimed squarely at imports from the European Union, China, and Canada. Trump framed the decision as essential for defending American jobs and industries from unfair global competition. But beneath the surface, one major casualty was already emerging: Tesla. The new tariffs directly impacted electric vehicle components, raw materials, and imported vehicles, many of which are vital to Tesla's operations. Items like lithium batteries, cobalt, nickel, and steel, core materials in Tesla's supply chain, became drastically more expensive overnight. The tariffs imposed up to 25% increases on certain car parts and as much as 35% on some vehicles. While European car makers also felt the sting, no American company suffered more than Tesla, whose business model depended heavily on international suppliers and narrow profit margins. Trump's speech at the tariff signing ceremony was filled with bold declarations. He framed the move as a patriotic stand against foreign powers taking advantage of American workers. But behind the fiery rhetoric, Tesla found itself directly in the line of fire. For years, Elon Musk's company had invested heavily in building relationships and global supply chains across Europe and China, key components of its international growth strategy. That entire foundation was now under threat. The financial Consequences were immediate and severe. Procurement costs surged as critical components suddenly became significantly more expensive. Tesla was forced into a no-win situation. Either absorb the skyrocketing expenses and watch profit margins disappear, or raise vehicle prices in a fiercely competitive EV market already swarming with cheaper alternatives. Neither option was sustainable. As the crisis unfolded in Europe and the US, the situation grew even worse when Asia entered the fray. China and South Korea, two of Tesla's most important markets and manufacturing partners, responded swiftly and decisively. China was the first to act. Already uneasy about Trump's protectionist policies and Musk's vocal political stances, Beijing slapped new tariffs ranging from 15 to 30% on US-made electric vehicles and auto parts. Tesla, already operating on thin margins, was hit hard. Chinese regulators also began tightening the screws at Tesla's Shanghai Gigafactory. Environmental compliance audits and labor inspections were introduced, slowing production lines and increasing operating costs. Meanwhile, Chinese state media launched coordinated campaigns questioning Tesla's data security practices and reliability. On local social media, influencers and citizens alike promoted domestic alternatives like BYD and NIO, while government procurement shifted decisively in favor of Chinese EV makers. South Korea soon followed with its own response. Seoul introduced new tariffs on U.S. auto imports, including electric vehicles, and implemented stricter safety inspections and battery certification rules, clear non-tariff barriers aimed at complicating Tesla's market presence. These developments were devastating for the company. China and South Korea represented a massive share of Tesla's overseas sales and manufacturing capabilities. As trade tensions grew, Tesla found itself shut out of once lucrative markets, while public opinion in both countries turned sharply against the brand. While Tesla scrambled to contain the damage abroad, a far more insidious threat was taking shape on the home front, one that would strike at the core of Tesla's global manufacturing strategy. By mid-2025, the harsh reality of Trump's trade war was becoming undeniable for Tesla. Beyond the plummeting stock value and nosediving sales, Tesla's most critical lifeline, its global manufacturing infrastructure, was rapidly unraveling. The company's entire business model relied on a meticulously orchestrated supply chain stretching across continents. Lithium sourced from Australia, cobalt mined in the Congo, nickel from Indonesia, semiconductors produced in Taiwan and South Korea, battery packs assembled in China, and final vehicle production in Germany and the United States. All of it formed the backbone of Tesla's global operations. But Trump's aggressive tariff strategy and the retaliatory responses it provoked sent shockwaves through this system. Suddenly, every link in Tesla's supply chain became a financial and logistical nightmare. Canadian and Chinese tariffs caused prices for steel and aluminum to spike. The cost of producing batteries soared as imported raw materials were hit with heavy levies. Semiconductor deliveries faced customs delays in South Korea. Every disruption created bottlenecks, raised expenses, and slowed production timelines. Tesla's response, trying to ramp up output in its American factories, only made matters worse. The company's U.S. plants were already operating close to full capacity and simply couldn't absorb the sudden need to compensate for lost production overseas. To make matters worse, the domestic shift wiped out any cost advantages. U.S. manufacturing came with higher labor costs, rising material prices, and more regulatory red tape, all of which ate into Tesla's margins. By the close of Q2 2025, Tesla's once flawless production engine had ground to a near standstill. The dream of a seamless, global EV empire had crumbled under the weight of economic warfare. Ironically, the very policies intended to safeguard American industry had left one of its most prominent companies severely weakened. But while Tesla was locked in a battle for economic survival, a storm of public anger was gathering momentum, and it wasn't just on balance sheets. By spring 2025, the public backlash had exploded into a full-fledged protest movement that transcended Wall Street and corporate circles. Across Europe and the United States, massive demonstrations broke out at Tesla showrooms, factories, and delivery centers. What started as online outrage over Elon Musk's inflammatory political stances and the consequences of Trump's protectionist policies evolved into highly organized grassroots protests. In cities like Berlin, Paris, and Madrid, crowds gathered, with signs reading, "No more Musk madness," and "Stop selling our jobs." Protesters accused Tesla of enabling economic nationalism, capitalizing on government policy while disregarding the social and financial fallout it left behind. Musk's polarizing behavior had lit the fuse, but now the fire was spreading everywhere. In the United States, the protests took a more personal and pointed direction. Labor unions and factory workers led walkouts, accusing Elon Musk of transforming Tesla from a groundbreaking innovator into a political pawn. The unrest wasn't confined to major cities. Smaller protests erupted near Tesla's manufacturing plants in Nevada and Texas, fueled by growing frustration over wage stagnation and corporate silence on how the tariffs were affecting everyday workers. Meanwhile, across Europe, the outrage expanded. Consumer advocacy groups teamed up with environmental activists to condemn Musk's political entanglements and call attention to Tesla's mounting controversies, from labor disputes and union suppression to ongoing safety violations. For many, this wasn't just about economics. It was about a deep sense of betrayal. Tesla had once stood as a beacon of the future, a symbol of clean energy, American ingenuity, and the promise of a more ethical, sustainable world. But that image was rapidly unraveling. Musk's increasingly erratic behavior and the geopolitical chaos triggered by his actions had tarnished the brand beyond recognition. The protests made it clear. The public had lost its trust, not only in Tesla, but in the man who led it. As demonstrations intensified, another force joined the storm: media scrutiny. Tesla's image, once lionized by financial media, tech reviewers, and environmental advocates, began to collapse under the weight of relentless negative coverage. The very outlets that had once celebrated every Tesla milestone were now documenting its decline with brutal headlines like "The Fall of an Icon" and "Tesla's Toxic Brand." Analysts and commentators who had praised Musk's vision now criticized his volatility and obsession with political grandstanding. Instead of lauding innovation, stories focused on quality control failures, delayed deliveries, and a deteriorating customer service experience. Footage of protesters outside showrooms became a nightly staple on news broadcasts, often accompanied by scathing editorials about corporate greed, tone-deaf leadership, and the dangers of political interference in business. Consumer watchdogs amplified the criticism, publishing reports that detailed increasing safety complaints and mechanical issues in recent Tesla models. The company that once epitomized the cutting edge of technology and design was now seen as reckless, bloated, and out of touch. Tesla's reputation hadn't just taken a hit, it had cratered. The media played a significant role in shifting public perception of Tesla, turning it from a cultural icon into a symbol of corporate controversy. But the impact went far beyond image. Consumer behavior quickly reflected the change. What began as backlash evolved into a clear and measurable response. Large numbers of customers began abandoning the brand. This trend was especially evident in early 2025 as Tesla's sales in Europe and North America experienced sharp declines. Longtime supporters canceled their orders, foot traffic in showrooms dropped dramatically, and the once thriving referral program lost momentum. Sensing an opportunity, competitors like Volkswagen, Hyundai, Renault, and Kia swiftly intensified their electric vehicle marketing, specifically targeting disappointed Tesla customers. European automakers leaned into messages about sustainability, dependable leadership, and reasonable pricing, while Korean brands highlighted their extended warranties, strong service networks, and increasing domestic manufacturing. The shift was most evident in places like Germany, France, and the US Midwest, where Tesla's market share dropped by nearly 70% compared to the previous year. Vehicles like the Volkswagen ID.4, Hyundai Ioniq 5, and Kia EV6 began replacing Tesla in consumers' minds as more practical, apolitical, and customer-centric options. Independent surveys backed up this trend. When asked why they chose to leave the brand, former Tesla customers pointed to three major concerns: political controversy, declining vehicle quality, and a sense that the company had grown out of touch with its consumer base. Even steep discounts and marketing pushes from Tesla failed to win people back. For many, their trust in the company had been broken. This wasn't just a temporary drop in sales. It was a deeper erosion of brand loyalty. While the public turned away, Tesla faced growing turmoil from within. Beneath the headlines, unrest was spreading inside the company's own walls. Discontent grew among employees across all levels, from factory floor workers to experienced engineers, many of whom began to question their future under Elon Musk's leadership. Signs of internal breakdown were increasingly visible. In both Nevada and Texas, labor organizers noted a spike in union efforts as workers raised concerns about safety issues, escalating production demands, and stagnant wages, all compounded by the company's worsening financial outlook. In Europe, Tesla's Berlin Gigafactory emerged as a center of labor strife, further highlighting the company's deepening internal challenges. Employees began staging walkouts across various Tesla locations, voicing frustration over what they described as unfair treatment, broken promises, and growing uncertainty about the company's future. Even Tesla's Palo Alto headquarters wasn't immune. Several top executives and senior engineers either resigned or went public with their criticism of Elon Musk's leadership. Whistleblower reports further intensified the turmoil, alleging a toxic workplace culture filled with favoritism and a troubling absence of clear strategic direction. But this internal crisis wasn't fueled solely by financial losses or media scrutiny. It stemmed from a deeper emotional fracture. Many employees had joined Tesla with a belief in its mission to revolutionize transportation and fight climate change. As Musk's political behavior increasingly grabbed headlines and the company's public image deteriorated, that shared sense of purpose began to disappear. By the summer of 2025, Tesla was dealing with more than just plummeting sales and a collapsing stock price. It now faced a workforce on the edge of open rebellion. The damage didn't stop there. Wall Street, once one of Tesla's biggest sources of support, began pulling back fast. What had started as ripples of concern quickly became a full-blown investor exodus. The aftershocks of Tesla's collapse in the European market spread to the United States, shaking confidence in the company's financial outlook. Tesla, once the crown jewel of institutional portfolios, found itself abandoned by some of its most influential backers. The sell-off started quietly, but accelerated quickly after early 2025 sales reports from Germany, France, and other major markets showed sharp declines. Major investment firms, including Royal Bank of Canada and Morgan Stanley, downgraded Tesla's stock, citing both falling revenues and the unpredictable political controversies surrounding the company. The Commerce Secretary's public statement labeling Tesla's stock too risky only added fuel to the fire. Pension funds, mutual funds, and sovereign wealth investors began dumping shares at an unprecedented rate, erasing billions in market value. By mid-March 2025, Tesla's market cap had dropped more than 50% since the start of the year, wiping out over $300 billion in value. Wall Street's retreat wasn't just a reaction to weak sales numbers. It was a calculated move away from a company whose long-term future now seemed clouded by instability. Musk's increasingly controversial behavior, growing backlash in Europe, and the economic impact of newly imposed tariffs all combined to severely undermine investor trust. Analysts began sounding the alarm. Tesla's once bulletproof brand had taken a serious hit, its global supply chain was under strain, and its profit margins were steadily shrinking. For the first time in its meteoric rise, institutional investors started to question whether Tesla could maintain its dominance in the electric vehicle space. The mass sell-off of Tesla stock wasn't a rash reaction. It was a calculated and coordinated shift. Hedge funds adjusted their portfolios. Pension funds moved their capital into safer, more predictable assets. Behind closed doors, murmurs on Wall Street suggested that Tesla's golden era might be nearing its end. But the concern went beyond investor behavior. Tesla's weakening position was triggering something far bigger, a fundamental reshaping of the global EV market, and Tesla was quickly losing its place at the center. What was unfolding wasn't just a Tesla problem. It was part of a broader global realignment. The ripple effects of Trump's tariffs, Europe's retaliatory measures, and Musk's political missteps were reshaping the electric vehicle industry in real time. As Tesla grappled with crashing sales in Europe and vanishing investor confidence, rivals wasted no time capitalizing. Chinese EV makers like BYD and NIO ramped up their European expansion, using the political fallout to their advantage. In markets like Germany, France, and Norway, consumers eagerly embrace their well-priced, high-quality offerings. European automakers also tightened their grip, leaning on newly implemented tax breaks for locally produced vehicles. Brands like Volkswagen, Renault, and Stellantis use the moment to solidify their market positions, offering models designed to meet European standards and consumer preferences. Meanwhile, Tesla's operations were hampered by rising costs, logistical issues, and softening demand, and the shift extended beyond Europe. In Asia, China and South Korea slapped retaliatory tariffs on US EVs, further eroding Tesla's profitability in the region. Canada followed suit with new import restrictions, and other emerging markets began pivoting toward regional competitors. By the end of Q2 2025, Tesla's global market share had slipped to its lowest level since 2016. The company's once unstoppable growth had stalled, and the looming question remained: was this a temporary slump or the beginning of the end? The dust settles. The world is left to ask: is Tesla's golden age truly over? The hard data paints a bleak picture. Global sales are down more than 50% year to date. The company has lost over $300 billion in market value. Its European foothold, previously a pillar of international growth, has crumbled. Major investors have abandoned ship, and trade policies around the globe have shifted in ways that favor Tesla's competitors. Whether the company can bounce back depends on several critical moves. Elon Musk must work to repair damaged relationships with global leaders and rebuild consumer trust. Tesla will also need to rethink its production model in a world increasingly shaped by protectionism and geopolitical uncertainty. Most importantly, the company must find a way to reignite innovation, something bold enough to win back both customers and investors. But even with all that, recovery isn't guaranteed. Many former customers have already embraced alternatives. The investment community has moved on, and Tesla's ability to lead the EV revolution is no longer a given. This isn't just the story of one company. It's a case study in how quickly a market leader can fall when politics, economics, and global influence collide. So the question now is, can Tesla find a way back, or is the damage too deep to reverse?